How banks profit while the economy collapses. Midnight to 0:30, cold open. Visual cue, empty streets, closed shops, newspapers blowing around. Narrator, calm, authoritative. The streets are empty. Shops shuttered. Headlines scream, recession hits. People panic. Money disappears. Or so it seems. But somewhere, quietly, billions are being made. Not by governments. Not by you. By banks. While the economy collapses around them, these institutions are profiting. And it's not an accident. 0:30 to 1:30, why it matters now. Visual cue, inflation charts rising, worried families at kitchen tables. Narrator. Why does this matter right now? Because the last crash didn't teach us the rules. Governments rescued banks, not households. Today, markets are jittery. Inflation creeps up. Debt soars. And the same forces are quietly at work. Understanding how banks profit could mean the difference between keeping your savings or losing them. 1:30 to 3 o'clock, how banks create money. Visual cue, animated flowchart of $1,000 deposit, $900 loan redeposited repeated. Narrator. Banks don't just hold money. They create it. Every loan isn't just a transaction, it's new money entering the system. Here's how it works. You deposit $1,000. The bank doesn't just sit on it. It loans $900. That $900 eventually gets redeposited. Then $810 gets loaned again. Multiply this cycle hundreds of times. That's fractional reserve banking. A simple rule quietly multiplying money, mostly benefiting the bank, not you. 3 to 3:30, profiting during collapse. Visual cue, stock charts oscillating, banks glowing, market chaos. Narrator. When the economy falters, most people panic. Borrowers default. Businesses struggle. Savings shrink. Ordinary households lose. Banks. Their profits can rise. Fees, interest on high-risk loans, and complex financial instruments designed to profit from volatility turn panic into profit. Government guarantees highlighted. Narrator. Here's the uncomfortable math. A bank might have a 5% default rate. But through interest, derivatives, and government-backed guarantees, it still earns a net profit. The system incentivizes risk, losses are socialized, gains are privatized. That's not a conspiracy theory. It's basic balance sheet logic. 4:30 to 5:30, public hype versus reality. Visual cue, smiling bankers on TV versus worried citizens. Narrator. Publicly, banks talk about supporting the economy and responsible lending. Headlines paint them as pillars of stability. Reality. Many thrive in instability. Uncertainty widens spreads, fees climb, and government bailouts create a safety net for the insiders, while the public pays the price. 5:30 to 6:30, long-term implications. Visual cue, Timeline from past crash present future, wealth inequality rising. Narrator. What does this mean for the future? Debt will rise. Wealth will concentrate. Crashes will keep coming. The incentives to prevent them are weak. The incentives to profit from them are strong. This system isn't broken. It's working exactly as designed, just not for most people. 6:30 to 7 o'clock, closing thought. Visual cue, empty streets, global financial hubs glowing, subtle question mark overlay. Narrator. So next time headlines scream, markets plunge, remember, someone is smiling. Someone is